Hello, Oracles. Well, Tesla rebounded about 2% today. We also got the dividend payouts for TSLY and NVDY, along with all of the other YieldMax ETFs. So we'll get into all of that and what we think is going to happen over the next month in just a minute. All right, so looking at the charts today, again, up just over 2% on the day, closing at 259.32. RSI is at 48, so just below the mid range of 50. So, again, not sure where we're going to go from here. Looking at the charts, we're right in the middle here. We've got a gap down to 235, a gap up to 289. Knowing August is going to be a low volume month, which we've been seeing already, just barely 100 million shares trading hands. So this is expected. Now the question is, which way are we going to go? Now, as you can see here, we've been moving in this downward channel. So again, we thought we might be breaking out or breaking down yesterday. We broke down. Even with the recovery today, we're still inside this channel. So we'll pay attention to this as the month goes on. As Gort and I were talking about, tomorrow and Monday are really going to determine whether or not this is going to be a continued downward trend or if we're going to break out of it. Now, we do have the X date for TSLY tomorrow, and so Monday typically we'll see a bit of a sell-off going on with people trying to take that money out because they know they're going to get the dividends, and then they move it into something else. And so when we look at TSLY, again, same downward channel that we are in. Now, it's not as exaggerated as Tesla stock because TSLY does not move as much, and even realistically, it's more sideways trading at the moment than a downward channel. But just something that we're paying attention to because the question comes down to, hey, do I sell after the X date and then maybe buy back in before the next dividend? Do I just hold on to it now? Which way do we think the stock is going to move over the course of the month? The way I looked at it was worst case scenario is you sell out right now, the ETF ends up going up in value, and when you buy in for the next dividend, you just can't buy as much because the price is higher. Best case scenario is you sell right now, maybe you have some profits, maybe not, but either way, at the end of the month, the price comes down, you buy it for less, and you can get even more shares for the next dividend. So those are the things that we are toying with right now. Again, I will keep you guys posted between Friday and Monday what I think is going to play out between this. And now looking at NVDY, this is the NVIDIA YieldMax, really just sideways. I mean, yeah, we've had a sharp drop over the last couple of days, a little bit of a rebound today, but realistically, it's just straight sideways. That's kind of ideal, again, for these ETFs and the options that they play. So now NVIDIA itself has also been trading relatively sideways recently. They do have this massive gap down below us. Don't know if we're going to fill it. And if we do, when is it going to get filled? Maybe it doesn't get filled until January if we do get this pullback that I think we're going to get. So this one here, I think, is still going to be a safe play. But again, just tracking it month to month, I think is going to be a safe play. And if for some reason I see any reasons to not be in it, then I will make the move accordingly. All right, so looking at the payouts for all of these YieldMax ETFs, we've got ARK 49.41%, Tesla at 61.18%, Apple at 30%, NVIDIA at almost 43%, and they do have Amazon, Facebook, and Google are going to be coming as well. So I will pay attention to those, see if those are worth getting into also. And so looking at the payout this month, it is coming in at 83 cents. So last month was $1.06. The month before that was 80 cents. And then the month before that was the lowest it has ever been at 44 cents. So 83 cents is right in the middle. And again, still an amazing payout. Considering it trades between $16 and $17 per share, to get 83 cents per share on a monthly basis is a lot. And looking at NVIDIA, they paid out 81 cents per share. So the payout's less because the ETF costs more, around $23 right now. So you're getting less per share and it costs more per share. So still right now, Tesla is the better way to go as far as this is looking, but this is still much newer than Tesla, even though they both are relatively new. And now I do own the APLY, the Apple version of it. It only paid 55 cents per share. Again, that's still a lot, but I think what I'm going to end up doing is selling out of this one and putting all of that money into one of the other ones because while this one's nice, the payout doesn't seem to be the same. So I don't know if it's going to be worth hanging on to. Maybe the growth on it is going to be better. And I mean, looking at the chart for it, it has just been climbing and climbing very nicely. So again, maybe this actually has a good return that I can get from owning it, but it doesn't move a lot. So I still think the better bang for my buck is going to be in TSLY or maybe NVDY if I want to diversify. And then ARK also paid out 68 cents per share. So again, that one actually isn't too bad. I did like that one. So maybe hang on to this one. But again, just looking to try and get the best bang for my buck. I don't know if I want to have all of these. I may just dump APLY and OARK just to keep the other ones with the NVDY and TSLY. And so jumping over to the macro for a minute, Unusual Whales tweets out, breaking 30-year average mortgage rates in the US have hit 7.2%, a 23-year high. So again, this is the last piece that we've been talking about when it comes to the dominoes falling and everybody's saying, "Hey, well, why do you think the market's going to fall?" The housing market has yet to pull back. The housing market is what is keeping core inflation high. That needs to come down. When we've got mortgage rates continuing to climb up as they are, eventually something is going to crack and we will see the housing prices coming down. That in turn will bring core inflation down. Now, the big question there is, when is this going to happen and how sharply is it going to fall? Because if it falls at a manageable rate and the Fed can control it, maybe we do end up getting the soft landing that the Fed is talking about, and we don't end up going into a recession and they can control this on the way down. But something tells me that there's going to be some other things that give along the way as well. When it comes to people losing their jobs, we still hear about a lot of layoffs going on. CVS is laying off a lot of their executive people on the higher end. So we've seen that happen. When I was working at Home Depot back in 2008 and 2009, that housing market crash, that's the first thing that they did. They started laying off the people at the top. You thin out payroll at the very top, and you take that money and you put it in the people down below that are actually bringing in the money for the business. Just one of those precautionary measures that companies take when they see things like this happening. This is kind of what we're seeing going on. And again, I mentioned it yesterday, could be a self-fulfilling prophecy. Maybe they're doing this because they think it's going to happen and they're trying to protect themselves. And in turn, by doing that, it actually causes that to happen because some of these people that they're laying off have bills to pay. They have houses. Maybe they can't afford the house that they were living in anymore. They then have to sell it and downgrade to another house. And then they're doing this. And now we have more houses that are higher end on the market. Now we have more supply out there. So because there's more supply, the prices on those come down. And in turn, all the other housing prices come down also. Could just be that domino effect happening. And it could be again triggered because people think that we are going to get this pullback. So I think we're going to get it. But again, maybe what happens, maybe because I think we're going to get it, that's why we're going to get it. That could be a mindset that's out there right now. You guys can let us know in the comments below how you feel. But again, I still think we have this coming. And again, I'm ready for it because if we do get it, seeing all the things we've been hearing about with Tesla, hearing about what Elon said about FSD, and they're realistically just going to be putting AI into the vehicles, which we already know they're working on, and they're just compute constrained. Telling me all about that tells me that this is a company that if we get a massive pullback, I want to buy the heck out of it to have as many shares as possible. I'm already doing that now, but I'm saving that cash because I think we are causing this self-fulfilling prophecy to happen, and I think we're going to get some opportunities later. But in the meantime, what I am doing is, of course, doing the TSLY. I've got my CDs still. I've got NVDY. Any ETFs I can bring in. Those of you who follow me on Patreon and are members, you guys can see how I'm building up my free cash flow coming in, all of the freebie money that I have coming in from all of these CDs and ETF dividends. I'm building that up more and more over time because the more cash flow I can generate from that, the more money I'm going to have to be able to take advantage of these opportunities if we get that big pullback. And now, of course, none of this is financial advice, but just knowing that history repeats itself, knowing that we've seen this happen before, I'm doing whatever I can to save as much money as I can to be able to be ready to invest because this is the moment we could potentially get that is going to be life-changing. Now, between now and then, here's the thing. We don't know when it's going to happen. We don't know if it's going to happen, but if it does happen within the next 6 to 8 months, I'm thinking that we now have this time where we're seeing big swings up and down. We've got an opportunity to make some serious money ahead of that. So some people like to swing trade. I'm looking at these ETFs. There's different ways to do it. So I don't think we're going to get this massive pullback immediately. I don't think it's going to crash. Yes, we had Fitch come out and downgrade the US economy. Seemed like, the market took a bit of a hit off of that, but kind of recovered a little bit today. So the big question is, are we going to continue this downtrend or are we still going to get some swing opportunities to make up a lot more money before we get that pullback. So again, you've got to do your own due diligence and research on what you think is going to happen. But that's kind of what I'm looking at right now is any opportunities I have to make some more money right now, I'm going to take them. And I'm going to take that money and I'm going to keep on reinvesting it into things that are going to make me more money and be very cautious because I want to make sure that I don't put that money into something that's going to tank and I'm not going to be able to recover from it. One of the things that my dad is doing to be safe on this is he is swing trading, but he's swing trading in very good companies because even if he misses out on an opportunity to sell on a pop, he knows that they are going to rebound at some point. He just loses out on time rather than losing out on money. So that's the way he's playing it in a conservative manner. And I'm sort of doing the same thing, but with ETFs instead. So that's just my thoughts for you guys. Again, not financial advice. Do your own due diligence and research. Do what is best for you and your own portfolio. But for me, that's what I'm doing to prepare to make sure that I'm ready to invest in any opportunities that present themselves to me, especially when it comes to Tesla stock itself. I still add every single day, but I think we're going to get these pullbacks, and I think I'm going to have a much better buying opportunity later, but I also don't want to miss it, so that's why I'm adding every single day. So that's all I've got for you guys. Let me know in the comments below if you guys have any TSLY or NVDY or any of the other YieldMax ETFs. Let me know how you guys feel about those. Thank you so much for watching. I appreciate all of your support. Have a great one.